This is the performance summary for week 11 of 2025, which was the week ending March 14th. Let's begin by inputting the beginning and ending balances. Beginning balance was on March 7th. And ending was March 14th. So I lost a little bit last week, down $187, which is a percentage loss of negative 0.66. But that loss was bigger in the early part of the week, and things sort of came back as the week progressed. Let's put in the theoretical trades. We did these 5 trades. And as we can see here, the exposure to each position was reduced. We did a 13% exposure instead of the usual 20% exposure because the system has calculated that we are in a bearish trend overall. And let's look at these trades one by one. First one is AVGO, Broadcom. On Broadcom, we actually made 3%. So the system picked up on the dip here, and we bought here and sold here. Next one is BK, Bank of New York. And this is the indicative dip. We bought here and sold here for a loss of 2.5%. And then on Philip Morris, we made a little bit, 34 basis points. The dip, entry here, exit here. And next one is Tesla. We lost about 1% on that one. So we got in here and got out here. And this is the big downtrend that it's been in, and I'll speak about the safety valve indicator that's in place in just a minute. But the last one we traded was Walmart. That was our biggest loser. We lost almost 5% on Walmart. Here's the dip, entry, exit. So I picked a couple of stocks to demonstrate the safety valve indicator. The first one is Intel, and this one's been in a pretty bad downtrend since 2021, where it peaked at $62 and now it's trading at $24. And so the black line is the stock price of Intel and the red line is the safety valve indicator. So around early 2022, the stock price breached the safety valve indicator, which is just a lagging price level of the stock. And as soon as it went below that red line, the stock would have been excluded from the ranking procedure of the strategy. And it's been more or less below that red line with a brief glance above that line in 24. But then it's been well below the safety valve ever since that time. And so it doesn't even come into play as far as the ranking process. We don't trade it. Another one is Walgreens Boots. This one is not in the S&P 100. In fact, it's going to be it's going private pretty shortly. And so the stock of Walgreens has been doing very, very badly. The most recent peak was in 2018, and it went below its safety valve. It went below the red line around then, and it's never looked back. So we wouldn't have been trading it at all for many, many years. And a more relevant example here is Tesla. We were actually actively trading this in the strategy, despite it being in a downtrend since December of last year. And the black line is Tesla, and the red line is the safety valve. So we can see the safety valve, well, it's gotten pretty close to breaching the safety valve, but not quite. And so we continue to trade it until it does breach it. And it could happen relatively soon, or maybe Tesla will take off upwards again, and it may not happen. But regardless, the safety valve is in place, and if it gets below it, it goes away from the ranking process. Now let's input the ending balance into our cumulative tab. So with our small loss of $187 last week, our cumulative running profit since going live last June is now sitting at $2,124. And so we're still up 8.29% since inception. And yeah, this is what the equity curve looks like. So yeah, we are still in a drawdown, but the drawdown appears to be stabilizing. And let's look at the equity curve over the longer term. So this is the equity curve going back to 1994, back tested, and this is where we're at right now. And here's the underwater graph, the drawdown graph. This is using weekly P&L, this drawdown, so weekly peaks to valleys. And right now we're sitting here at around 15%. And the last time that happened was in 2014. And the prior time was before the dot-com bust. And so we can see that the drawdowns of the strategy are not extremely correlated to what happened to the drawdowns in the actual stock market, because the actual stock market had its big drawdown in 2008, 2009, whereas right now the system's drawdown is exceeding the system drawdown back during the 08-09 period. So we can see that the strategy is correlated 64% to the S&P 500, but the drawdowns are only correlated 31%. So there's not that much correlation to the drawdowns. So whenever we've had these drawdowns, that means that the volatility has picked up in the mean reversion factor. And no guarantees, but that could imply strong performance in the near future. So for example, in the 98-99 period, we had big drawdowns in the strategy, and these were the returns. In 98, the strategy was hypothetically up 42%, and in 99 it was up 45%. And then came the dot-com year of 2000, it was up 73%. So volatility often implies high performance, but no guarantees, of course. So that's the performance summary for week 11 of 2025. If you want to learn more about the strategy, please visit my website. Link is below. Thank you.